Wait, so what is the block time you would want?
So there's a limit at some point.
Yeah. But I mean, what would you want?
Roughly like 100, 200, 250 milliseconds.
250 mil. That's faster than Solana. You want faster than Solana blocks on Ethereum.
Yeah, fuck it.
Not a dividend.
It's a tale of two quants.
Now, your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
I like that ETH is the ultimate Ponzi.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to the Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. First, we've got Tom, the DeFi maven and master of memes.
Hello, everyone.
Next, we've got Tarun, the Giga Brain and Grand Poobah at Gauntlet.
Yo.
Today, we've got a special guest, Stani, the architect of Aave.
Hello.
And I'm Haseeb, the head hype man at Dragonfly. So we're early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. So we are together in person in Salt Lake City for Permissionless, where it's rounding out the year of conferences. It's been a very busy time of year. I just heard that you guys were at Mainnet in New York City. Tell us what Mainnet was like, because I heard not amazing things about the Mainnet turnout. Stani, you said you were there. Tell us what the vibe was.
I was there.
You didn't go. You were
It's in my
New York.
hometown. It's in my hometown.
How did you not go? I do
It was
not
too
believe
close.
you did.
I think
You
it was
did
too
not go.
close.
It's just like
I didn't go either.
Yeah,
What do you mean you
exactly. We
didn't
both
go?
live.
You went to side events, right?
Yeah.
Okay.
I mean, Tarun had an after party, actually.
Yeah, exactly.
Wait, so if you had an event, you kind of went.
I think it's just more like, hey, you know, if people are in town, maybe have a little party. But
Stop by.
I feel like everyone I talked to was like, I'm not going. Like, I just kept asking people, are you going to this conference? And
I think a lot of people who came were like outside of New York.
Yeah.
And there was like Token 2049. It was like
Yeah.
a huge event, and like people are like tapped out, I think.
Yeah.
A lot of conference fatigue.
Yeah.
So, okay, you were at the main event.
I was at the main event.
What was it like getting on stage at Mainnet?
I mean, first of all, it was great for me to be there in New York. But I do think it was way more quiet than it was in Singapore. And Singapore audience was a little bit different because it feels like the East and the West were there in terms of like crypto.
Yeah.
Mainnet wasn't like that. It was, I'd say it was like a lower turnout. And it was more, I would say, a little bit stratified to some extent.
Okay.
RWAs was one big topic that people were talking about.
I feel like that's kind of my vibe of Mainnet, though, is like that is the people who would normally go. But I mean, obviously the big thing is Selkis is no longer part of Masari, and I feel like he's also kind of the draw. So I feel like they're actually kind of doubly cursed in that like people who would normally go to like see his like aren't going to go, or because he's not there, and then other people are like very turned off by his whole like political bent, and so they're also like not going to go. And so I feel like actually
Selkis was not there at all.
I think he did show up, but he did
show up.
He's not the MC, you
Okay.
know. And so
really?
No, he left Masari. So I think
so. Who's MCing now? Who's like the main guy?
This is exactly the point. It's like
Okay.
I don't know. I'm not going to this event,
I
and so
see.
I feel like he's probably feeling vindicated in some ways. That it's like, you know, look at what this conference is. Look at this company is without me. Like, you know, I am Masari.
I see. So it's like Apple without Steve Jobs.
Yeah,
Look
exactly.
at me now.
All right.
Yeah.
Wow. Okay. All right. Well, we hopefully permissionless has better vibes than that, but I don't know what the turnout for permissionless is going to be, but hoping it's going to be somewhat better because I just feel like a lot of people are here.
Yeah.
Yeah. Also, why are all these conferences stacked in this time of year? Like, why not spread them out throughout the year?
If you remember last year, they did permissionless literally at the same time as Token. And so it was you had to pick one or the other, and that was a big mistake, I think.
Oh yeah, and there's like no events beginning of the year. Like there's just nothing.
Exactly. Why not just do your events then?
Actually, I like it because I don't need to travel half of the year. So
yeah. Well, it's like, you know, it's cold.
I can build.
People want to stay home. You know.
No. It's cold in half of the world. The
That's
other
true.
half is hot.
That's true.
Australia
It's hard
could
to get
be
to
over all the
that
conferences.
part of the world, though. You know, so yeah. Okay, but speaking of Token 2049, so actually I wanted to issue a correction. So if you guys recall, on stage we were with Mo Sheikh and Arthur Hayes, and while I was on stage at Token 2049, I made a statement about Kaya, the blockchain that was a fusion between Clayton and Finchia, which was the Line blockchain, and I made a claim that I heard from some guy at a party that that the Kaya blockchain was a rebrand from Clayton because Clayton had been raided by the CEO of Kakao and that they had stolen a bunch of money. So apparently this was, I got in touch with the Kaya team because they were not happy to hear that I was saying this. apparently that is bullshit. That is not correct. I probably should not be reciting things that I heard from random people at parties. So apologies to the Kaya team.
Unless it's Tarun's party.
Yeah, Tarun, all sorts of bullshit.
There you go, exactly.
But yeah, I try to avoid just reiterating complete bullshit rumors. So,
but actually, this
apologies
is good proof that you're getting insider gossip. Although maybe bad insider gossip.
Listen, that guy was not an insider. He was just like some guy at a Korean, just a Korean was basically my source for this. So yeah, it was kind of a throwaway comment, but I don't want to be going out there, just talking bullshit. So anyway, okay. So putting all that stuff aside, let's talk about some other bullshit that's going on. So there's an HBO documentary that's supposed to drop today. The HBO documentary is called Money Electric: The Bitcoin Mystery. And the hype around the show is just going to drop on HBO Max. And the hype around the show is that it's going to supposedly reveal who the documentarians believe is Satoshi Nakamoto. So there's a Polymarket market for who is going to be the person that they name in the documentary as Satoshi Nakamoto. And right now, as of a few days ago, Len Sassaman was the leading candidate, who's like this cryptographer, PGP, early, cypherpunk guy. He has plummeted in the rankings. And actually, so far, there's been some speculation from somebody, I think it was Samson Mao, who was apparently interviewed in the show, who claimed that nobody who's front running on Polymarket is going to be the person named on the show as Satoshi Nakamoto. So now the market has plummeted, and it's like 80% that it's going to be either nobody who's on the list or multiple people. So there's always, every couple years, there's always this frenzy of like getting back into the speculation about who Satoshi Nakamoto is.
I feel like we haven't had one since the pandemic. I actually feel like the pandemic stopped all of the speculation.
Well, there was a viral blog post about Len Sassaman that I think came out a couple years ago that got a lot of the speculation going again. I will say I've always found it kind of distasteful of like the speculation about who is Satoshi Nakamoto, but I can't quite put my finger on why I feel that way. It just feels like a stupid thing to be spending time on. But I don't know. What do you guys feel? Because obviously nobody knows, and the documentary will be live by the time this airs. But what do you guys feel about this, hunting for Satoshi thing?
Well, first off, isn't this Sassaman thing like he has a bunch of Satoshi has some posts after he died? So like, if he is Satoshi, he's probably one of a group. And I don't know. Personally, I just prefer thinking it's a group and that they've like made a death pact and no one will ever know, or it's a CIA or whatever, versus like one person. I feel like this idolatry of like it being one person is actually the problem. Is like there's this expectation that there is this single figure, but like, what's the likelihood that's a single figure? I'm a little on the fence.
But the thing with the group is that at that level, like someone is tempted to actually like talk about it.
Yeah,
it has to be like really, secretive group, or like I don't know. Like it feels like if there's there's multiple people around it, and they've been able to keep quiet so long, it feels like a really hard thing to do for humans.
A lot of the candidates died though, not in pretty soon after.
Maybe they were together.
I think it makes sense, right?
I just a lot of them died at weird times and in weird ways. So
yeah, I don't know. I think I guess I don't know if I'm distasteful, but I find it strange that so many people are curious. I find it very hard to believe that you're going to find smoking gun evidence at this point. If you consider all the time and energy and bounty that's basically gone into trying to find Satoshi, it's like now, like almost 20 years later, we're going to find some, like, that just seems very improbable to me. And two is like, part of the appeal of Bitcoin, I think, is sort of the immaculate conception, and we don't know who Satoshi is, and there isn't, some doofus who, we're never going to dig up all the bad history and be like, look at this, all these bad things this person said, or like, I feel like anyone at some point is going to kind of get, milkshake ducked. And so I think, I think just like let it be. Like that is kind of the point. And it's like what outcome do you want from this? I don't think there's anything.
That's a good way to put it. I think the answers can only be bad.
Yes.
Right. Like there are there are a bunch of okay answers, and then there's some really, really bad answers. Like Adam Back is a very bad answer to who is Satoshi, or like, Peter Todd or something. If that turns out to be Satoshi, it's just like, that's, I don't know where the world goes, but not in a good direction. If it turns out that like, so, he's alive and still has all the keys, and it's just, everything is terrible.
Yeah.
I don't know. So I get part of it. It feels very like kind of JFK assassination-y, where it's like this, it's a fixation for a kind of person who their brain power would be better spent on other things. Right. That's kind of why I think I don't like it so much. And to your point, like it doesn't matter. It sort of hurts this immaculate conception story. Like the whole point of Bitcoin is it doesn't matter who made it, and that the person who, like, even if it is Adam Back, which, you know, again, probably not, but even if it is Adam Back, like, who cares? Like, what does it matter other than like, okay, well, this guy has, you know, tens of billions of dollars of Bitcoin now, and that, okay, that's potentially concerning. But beyond that, like, it doesn't give him any more legitimacy in deciding where Bitcoin should go.
Yeah, I agree. I think, yeah, like the other thing that I think was funny about this prediction market is, I feel like in some ways it's actually kind of a indictment of prediction markets that surely like press screeners and all these kinds of things have been set out. Like surely many people have watched this documentary at some point, and yet nobody is betting on the, or I guess maybe to the point, that's why it's 80% somebody else, but like,
well, that was only very recent. That was only in the last few days.
Right. But you would think someone would be maybe, I don't know, sort of showing their hand, or like someone would have spoiled it at least just for like internet points.
Well, I think what is being implied there, I mean, so obviously there's Samson Mao saying, you know, he was on the show, so maybe he's seen it, in which case he's like, okay, it's none of the people on this list, so people moved their bets after that. It could also well be that the people realize that, okay, the volume on this thing is speeding up as the hype around the show is speeding up, and then somebody who has access to, you know, they know who the answer is, it's nobody on the list. If there's nobody on the list, that's how you make money.
Yeah.
So at this point, like the thing that's interesting about this story more than anything is that it's kind of a new way to experience media. You know, this okay, there's a betting market on who it's going to be. There's teasers that roll into it. It could also well be that the producers of the show are American, and so they can't bet on Polymarket. You know, and,
there used to be like Vegas books would offer odds on like TV series finales, like you could bet on like the Seinfeld finale and stuff like that, but it's like very one-off bespoke kind of things. But we should get those going again, you know. It's
the Sopranos. I remember there was like a huge volume that was like in the front page of a newspaper.
What was the
highest betting volume, whether he would die or something.
Who dies, because someone always dies in Sopranos.
I see. Okay.
But it could be even like interesting, like a go-to-market strategy, like just like create a market and start putting liquidity in
growth hacking.
Put incentives
TV
on,
show.
put some incentives to juice betting on the show. Yeah, that could be good.
I mean, honestly, though, if I were to do that, I feel like reality TV shows have an audience that's captive and would be willing to bet more than like this type of stuff.
That's true. Yeah. I mean, that's already basically sports, right? So you have to expand out from the sports betting market into other kinds of television.
Yeah.
I mean, I would love to bet on Love Island. You know who wins it.
Okay.
I don't know if you have it here. It's in
the
UK.
problem is, I guess like the people on the show could definitely bet on themselves.
That is true. You need, again, some sort of death pact or something.
Exactly.
Okay. Or you just do multiple edits and you don't reveal who it is.
Yeah. All right. Fair enough. Well, speaking of Polymarket, so Polymarket has also been ripping. Obviously, we're now 25 days away, 30 days away from the election. So we're getting very, very close to home stretch. Polymarket odds from Kamala versus Trump. We're now back to 55-45. It's been wavering up and down. Now it's about 53-47 in favor of Donald Trump once again. We've seen all-time highs of volume. So the chart of betting volume for Polymarket just looks like it's getting steeper and steeper with every passing week. So the interesting thing now is that Polymarket, because the Polymarket odds have now diverged a little bit from a lot of the kind of election modelers. So, you know, if you look at the New York Times, if you look at 538, you look at Nate Silver, their odds are pretty neck and neck. They're pretty close to 50-50. But Polymarket kind of had this outsized move with a large amount of volume being bet very suddenly on Trump. So this has caused a lot of conversation about, is there a Trump whale? Is this inorganic? Is there somebody trying to move the market intentionally towards Trump in a way that is outlying from the actual underlying odds? And if so, isn't the whole thesis that markets are supposed to correct this? But it doesn't seem like markets are correcting it to move back toward the odds from all the other pollsters. So curious to get people's thoughts. There's a lot of conversation now about this of, is there some funny business going on Polymarket in the home stretch of the election?
Elon, is that you?
There was some weird thread talking about, is this maybe Elon Musk? I find that to be just complete. Like, I read the thread, I'm just like, what is the evidence of that? There's some guy who bet a lot of money.
Yeah, there is one account that's just been accumulating Trump shares. And so, I don't know if it's Elon, but that is some of the pressure. But I think specifically there was like just a weird move up. Like a lot of this has been like one leg up. I think it was like basically Monday market open in the US. There was like a tick up 2-3%. And that's kind of where this is come from. And now it's just persisting. But I think to your point, there's been all these conspiracy theories around like, oh, well, I mean, I'm like, this market is, symmetric, at least it has price right now. Like you could go and make money on this pretty easily. And then people always try to explain away, oh, well, you have operational risk and, you have opportunity cost. And that some of those are technically true, but I'm also like, 25 days.
Well, the opportunity, exactly. Opportunity cost is bounded.
Yeah,
like,
yeah.
Now it's only a month away.
Yeah.
Right?
Yes.
So it's not bad.
So I think maybe part of it is honestly just people, don't have enough conviction. There is just a wide range, there's a wide envelope of outcomes. And, it's hard to say that you're really, making, 3 cents if you're, selling Trump at 53 cents or vice versa.
Yeah.
You can capture a little bit of an arb, but maybe it's not attractive enough for people. So, or, again, maybe someone has some sort of inside info. Maybe they're looking at future polls or something that is like indicating something more bullish for Trump. But I don't know. I think everything else, I kind of assume the market is working as intended and it's functional. And like, I'm kind of inclined to more trust that more than, again, some of the even more sophisticated models.
Yeah. I mean, polling error is a lot wider than 3 points.
Yeah,
So-
yeah, exactly. I mean, my thing is actually, I think the elasticity of the market versus the elasticity of the polls to like certain events is very different. Like the polls don't respond to these like 60 minutes type of things as fast as like the market does. And I feel like that 60 minutes interview was, I mean, disastrous might be the wrong word, but it was not a good interview.
I
feel like that was like
into the Call Her Daddy interview with Kamala. That was the
that probably got a lot
yeah.
wider distribution than 60 Minutes.
Yeah. I just watched the 60 Minutes one because like I thought that, and I don't think that people were maybe like I don't think it was like the same demographic that is trading on Polymarket is the one listening to 60 Minutes.
Right.
But the TikTok reels and the small videos that people were making from it were very bad. Let's put it that way. I was actually like it had a lot of bloopers, but yes. The
I feel like we've been through this before. You watch TikTok?
you have to do
You're like,
frequently.
you also watch TikTok?
Yeah, totally. It's like you get the news fastest from TikTok. Like that's
You
why
get
kind
the
of like
news fastest?
yeah, because like in TikTok also like you get a lot of videos. So
Well, yeah.
for me
That
actually
I
TikTok
understand.
works really well, and because I go from every direction on TikTok, like the algorithm just keeps changing. It's really actually gives me like from the hurricane news and everything, all the latest news.
But you're getting US news. You're in London, right?
Yeah. I mean,
Okay.
the TikTok algorithm really is something else. Like it really picks quite well of your location, backgrounds, even like if you use the same Wi-Fi and similar type of content from what
Do you
other
get
people
crypto
follow.
content on your TikTok feed?
Actually, I don't at all. That's
no
weird,
crypto.
but no.
Okay,
no.
I see.
I do
All
think
right.
there was some correlation between Elon, like there's interesting events, Elon stepping into, the Trump rally in Butler, and then at the same time, you have this like a huge bet on Polymarket. I think that's like a kind of like what you mentioned, Tarun, about the audiences, that there's some correlation there.
Okay.
I still, yeah.
I mean, I use TikTok for restaurant reviews, honestly, because I think the best restaurant reviews are on TikTok. So
Oh, that is true.
the
yeah.
really good restaurant reviews, much
Yeah.
better. The Google reviews are all gerrymandered and fake reviews, but the TikTok restaurant reviews, it's much harder to fake the full video right now. I mean, I know in 5 years we won't be saying that, but like
Yeah.
right. And so
Okay.
like you get
Fascinating.
good restaurant reviews.
Wait, are you also a TikTok consumer?
I deleted it.
You do it.
Yeah.
Okay.
Yeah, just
Yeah.
not.
Yeah, I don't trust TikTok.
I honestly
I don't
used
trust
to,
them all.
I used
Yeah.
to be like that, and then I just use it on this burner Android phone.
Okay.
I-
you have
Way to
you
do
have
it.
dedicated TikTok phone.
Yeah. It doesn't
You don't want to
touch-
give any data.
Yeah.
It doesn't touch my normal phone.
All right. Damn.
That's good.
Yeah, that's. I actually I tried TikTok once. This is totally unrelated to crypto, but I tried TikTok once in Singapore because it was on a TV. There was like a smart TV that had TikTok on it, and so I was like, all right, I'm going to try TikTok because it's not my machine. It's not connected to me in any way. And so I saw Southeast Asian TikTok, which like aggregates a lot of different countries together because it doesn't know where you're from. So it gives you like some Vietnamese content, some Indonesian content, some Chinese content. It's really strange. It's a really
Yeah,
strange
I can
experience,
imagine.
but did not make me want to spend more time on TikTok.
Yeah, I guess but going back to the
Yeah, sorry, you're
the,
telling politics.
the
politics TikTok.
podcasts and these clips.
Yeah.
I think the clips from these events are from these recordings, these like long hour plus long things,
Get incorporated.
are much more impactful to the Polymarket pricing than they are to the polls.
Yeah,
and
that
I
makes
also
sense.
think the poll sampling is like if you look at the median age in a lot of the polls, it's like way higher than the median age of like a Polymarket user.
Right.
So in some sense, they're just different.
Yeah, that's probably
data
right. That like
sources.
they're doing corrections for it, but those corrections probably can't incorporate something like this podcast just came out and TikTok hates it. You
Yeah.
know, and like that's losing her some of the Gen Z vote or something like that.
Yeah, I have never seen Polymarket advertised to me on TikTok. Have you?
No.
Advertise on TikTok.
Or
Yeah,
just
I
like
can't
sorry, like
imagine
someone not advertised.
There,
But like
there's a lot
making
of crypto content on TikTok, but it just doesn't surface to me.
they would. You get
That's
crypto content? Okay, yeah. It seems very different than the kind of stuff I do on Twitter.
I think the only time I've ever seen crypto content on TikTok was 2021 when I would get, I got a TikTok that was like, here's how to log on to Binance Smart Chain and buy SafeMoon.
Yeah,
was like,
there's a lot of onboarding.
Good old times.
that
Yeah,
happens
I was
through
like,
TikTok.
what?
I know. And a lot of meme coin stuff happens on TikTok. And we have content on TikTok? Or
We've
did at
been
some point?
experimenting with some
We've
shorts. I mean, kind of
experimented,
just
yeah.
the classic, I've been trying to get our intern to do more of like the dual screen brain rot kind of thing, get some like Subway Surfer going on the bottom. So if he's listening to this right now, which I assume he is, tune into the Chopping Block TikTok for some
Okay, sick.
some good condensed
All right,
content.
let's get, so you got to get subscribed to the. You can't subscribe on TikTok, can you?
You can follow.
You can
Follow.
follow.
Okay,
Even
follow.
even the following isn't that big thing on TikTok because the
Yeah,
algorithm is so powerful.
Yeah, exactly,
just
yeah,
such as the content.
So okay, so as we're talking about politics, obviously one of the big stories in crypto has been World Liberty Financial, which is the Aave fork. I think it's still supposedly a fork. Unconfirmed.
Not a fork. Not a fork.
Not a fork.
Not a fork.
Okay, all right.
Let's
Let's
be
let's
clear.
now that we have you here, we've been trafficking in rumors the entire time that this has been a story. So I'd love to get from your side the narrative of how did all of this come together? What the hell is Doe Finance? How did it come into play? And what is the connection between World Liberty Financial and these guys who are helping run this thing and Aave?
Yeah. So based on my understanding is that obviously Doe Finance was a team that is basically forking Aave and trying to do like some sort of lending protocol.
Is this a blessed fork? Is this like a, you didn't know what was going on?
I mean, there's not really like friendly forks of Aave. People just
Okay.
use Aave.
Unfriendly fork. All right, got it.
But nevertheless, I think like they wanted to basically use Aave and build on that. And this team essentially their vision is to create a some sort of like a new type of experience and to a new audience and basically bring some new users into DeFi, which I think is really interesting because I do think like whether it's like Aave protocol or DeFi in general, it's permissionless protocol, so anyone can actually like plug it, use it regardless of like their political backgrounds or whatever regions they are. But what's interesting here is that we don't have that much information about it. We know that it's integration into the Aave markets and that there's going to be a new product, a new type of experience, and a new audience that they're targeting. So
It sounds like they haven't talked that much with you guys.
well, here's the thing. Like
Yeah.
usually a lot of these things happen in the governance forum or either like at some point, essentially. So I actually wake up every day and I see something new in the governance forum and I'm like, fuck, I need to like read this. And a lot of time will go. Like a lot of things actually, happen outside of our team and we don't know anything about it.
Right.
There might be a service provider that is working with a particular team and, they work on a proposal. And a lot of things happen very decentralized way. But I think that's the whole point of a decentralized organization is that these teams, they don't need to rely on us. They can just go to the DAO and,
Sure.
propose their thing. And also like if it's a pure integration, you can just plug it in. So you don't
But
really
this is
need
not
to
a
do
pure
anything.
integration, right? They're forking Aave.
They're not
completely.
forking Aave.
They're not forking Aave.
No.
So they're
there's
using
no
Aave
forks.
on the back end.
Yeah.
So
yeah.
their liquidity comes in through Aave.
Yeah.
Oh, I see. Okay.
And there's some easy way of like onboarding with fiat and whatnot.
got it. Okay.
Um,
So I mean,
respect
So
the hustle.
wait, yeah. Then WLF is a meme coin officially.
Because
Because it doesn't really have any.
Well, no. Isn't this the whole thing about applications,
saying-
owning
I'm
the
just saying,
user, blah blah blah, right? Like
it's a infrastructure flavored meme coin. If it doesn't
infrastructure
control
flavored.
it doesn't
Infra
control risk
adjacent.
parameters, doesn't control fees.
Why doesn't it control the risk parameters?
I guess it does for a vault or something that I don't know. It's
Yeah, we don't. First of all, we don't know what the
there's
token
some
does.
sort of a vault structure there.
Okay.
Yeah, some sort of a vault structure where
Okay.
if they're fees,
Yeah.
if they're fees, I take it back.
yeah,
Then
there's
then it's
fees,
a-
there's
gonna be fees,
audience.
yeah.
Yeah.
I mean,
What about all
just
the
gonna let
wallet
retail-
front ends that are charging fees? Those like meme coins for Uniswap. Like, no, those are real apps that are like, just charging fees on top of. A
No,
protocol.
but they don't have a token. Whereas this
they,
is like
they do have tokens.
Oh yes, they do.
Yeah.
Like who?
Oh, yes, they
like
do.
Banana Gun.
Oh yeah.
Yeah.
Sure. Yeah, I guess if you're comparing it to that, I was thinking more like Phantom or like a vertically integrated.
Oh
thing.
sure, but they're still making money. Like
But I
For
think
sure. But
if you have audience and you have user base, then basically kind of like you can manage that and control like fees, for example. So
Yeah.
I think there's a lot to do. I actually think that like we should figure out beyond kind of like these like infrastructure protocols and like what can be done on that like app level if you actually like own the users and what you can basically do with like fees and sharing revenue.
It still feels like a weird access point to bring people into crypto, right? I mean, obviously everybody loves Aave, and the lending markets and money markets are some of the oldest things that have really worked in DeFi, but they are kind of a power user thing. Like you sort of show you the first thing you do is not like, great, let me borrow against my ether and like recursively stake or something.
Yeah, but I think the power user comes because like Aave enables all these different pools and strategies. But
Yeah.
the most simple use case is just like if you have a stable coin, put it somewhere, and then like the step more like easier from that is that
True.
how do you go from like just put your fiat and in the back end it goes to Aave essentially. So like there is kind of like
I guess that is
easier
true.
path.
You're bringing people
path
in off
there.
the street. Like, because I'm imagining, okay, you're selling people steak knives, for-profit universities, and it's like, oh, here's the crypto thing you can do. Come into here and like borrow against your assets, or like I would think it'd be like, okay, trade meme coins, do some other crazy thing.
Fun. I think that would have
Yeah,
exactly.
right.
Trump.fun,
But actually, I still think WLF is good as a meme coin because one anecdotal thing I will say, walking around New York, which is weird, right? In New York, I would not. I don't even think this was definitely not true in 2016 and 2020. But the amount of Trump merchandise being sold on the street is insane, and I feel like if WLF is a meme coin, it's the same as that stuff I see in the street.
I assume this is unlicensed Trump.
I mean,
Unlicensed Trump stuff is selling everywhere. In Chinatown, you can't walk
Yeah, it's
anywhere in New
everywhere.
York
Oh,
without
wow.
seeing it.
Okay.
It's like it which was never true in the last few elections. So like I feel like WLF could capture the market.
I mean, I think you have both, right? So like DeFi in the back end, secure, and then meme coin in the front end, and then governing fees. But I do think like why it makes sense to me, for example, is that we don't really have like CFI DeFi when it comes to lending. Remember like BlockFi, Celsius, and Genesis, whatever lending, they all like they don't exist anymore. So it's pretty much like DeFi led mostly. And one thing what's interesting about these kind of like a CFI lenders is that they were actually able to make it very simple because they're very forward facing on the user. So like I think it was like Celsius that was offering like, was it like consistent like 6% yields, like super easy. On the back end, obviously they couldn't like sustain anything, and like when the market crashed, but they were able to make it like super simple.
Yeah.
So I think like if you remove that backend that they had and just replace with like a DeFi backend with like Aave and these other protocols, you could actually like focus completely on that, owning a user and making it super easy to just supply funds.
Right.
I agree with you in principle. I think my question is, there's a balance between having it be super simple and then being transparent about risks to users. Like there were also a lot of, anchor neobanks that like went through YC in 2021 and they just, ACH in your money and we'll give you 20%. It was just an anchor front end and then, kind of went down. How do you sort of, not that Aave is anchored to be clear, but it's like, how do you sort of think about disclosures and I guess like how much to kind of expose to the end user?
Well, good thing about DeFi is that there is like disclosure 24/7. Kind of like it's just about like how do you bring it to the user. So I guess like there's like multiple steps removed between like the visibility and also things like resiliency. Like these DeFi protocols can be very resilient as we've seen. So it's just like the last mile. Like how do you make it safe and also easy to use? At least like DeFi removes some of the issues, but it's not kind of like a silver bullet. Like
Yeah.
I mean,
they can still screw up. So
after reading the 0xB1 lawsuit, let's just say I feel like that's a very far Celsius was a far cry from we just use DeFi protocols to get yield.
Yeah.
Yeah, the other thing that's true is like disclosures don't stop you from making stupid decisions.
yeah, exactly.
They just stop you from hiding the stupidity, right? But like you can still put your money in Anchor, even if Anchor disclose. Like everyone kind of knew that, Anchor is not sustainable. I mean, it's pretty tough to sustain this. But people were like, oh, they'll probably make it work.
I mean, one of my favorite governance fights in crypto of all time is the 2022. Like I think it was like March or February, where people were trying to reduce the Anchor interest rate.
I remember that.
Yeah.
And that was so funny. That is like exactly
It's
this.
very morbid now to look
Oh my
back on
God.
that.
Is it? I feel like we've had a couple of years. We can make the jokes. This is, I feel like we can make Anchor jokes now, right?
I was
Yeah,
kinda-
I think so.
I think
Yeah,
it's-
it's about time.
It's about
Yeah, I mean, anybody who died from that is like
Yeah.
deep in the ground at this point, so that's true.
Yeah, that was kind of remind me of the that drill tweet where it's like, someone help me, my family's starving, and it's like food $80 and the candles $3,000. Spend less on candles, like no, and it's like that was like no, it's like we're not gonna cut the rates,
Yeah. All right. Well, speaking of rates, another big story that has come out this week is a redux of Operation Chokepoint 2.0 being now under the magnifying glass.
Can't make jokes about that.
No, we can,
Yeah, we can make
we can make jokes about this, but it is a very live story. So Nick Carter has coined this term Operation Chokepoint 2.0 as being a description of the FDIC and the Fed putting a bunch of backdoor pressure on the banks, particularly after the collapse of FTX, to stop banking the crypto industry. So this has been kind of alluded to. There's a lot of gesticulation of, maybe there was some untoward stuff that was happening. But some recent reporting by Nick Carter and then continued on by some of the Unchained team this week has shed a lot more light about the particular things that made, or the particular ways in which regulators were putting pressure on the banks to stop banking crypto companies. So the two particular details that I thought were very salient in the story, one of them was that apparently the FHLB, which is the Federal Home Loan Board, which was a common source of funding for a lot of banks, was pressured by Elizabeth Warren to cut off Silvergate very early on, before any of the bond market pressures really started roiling over and making all this stuff very unpalatable. So apparently Elizabeth Warren was very directly intervening on the sources of capital for these banks to remain solvent. A second point, which was just brought up recently, was that a lot of the folks at the banks, as well as at FDIC and the Federal Reserve, were communicating this 15% deposit cap, saying that banks should not have more than 15% of their deposits banked with crypto companies or crypto affiliated companies. Now, normally when you pass a rule like this, it has to go through a rulemaking process. That is part of the APA, the Administrative Procedures Act in the US. You're not allowed to just decide this and promulgate something that is a rule without going through this act to allow some democratic input into this rulemaking procedure. However, the rulemakers and the regulators who were doing this at the time were not putting any of these rules into writing. They were not going through any kind of administrative procedures process, and they were intentionally only doing this through phone calls, without avoiding a paper trail, which would allow some kind of FOIA request to get information about the fact that, hey, it seems like there's some backdoor rulemaking going on that is not being admitted to in public. So if you notice, any of the public statements that were made by the regulators at this time were all denying that there was any kind of pressure being put on the banks to not bank crypto companies. So now that a lot of this is coming up, especially due to some of the I think the testimony in the Silvergate lawsuits, we're now getting a lot more of the word from these banks, as well as some of the backdoor reporting that's taking place through folks who are not willing to come fully on the record yet. But we're getting a fuller picture that Operation Chokepoint 2.0 was exactly what we thought it was, which was there was pressure from the administration and or from Elizabeth Warren and or her compatriots to unbank the crypto industry and pin the tail on the donkey and say the banking crisis was because of crypto, even though now in retrospect, that was clearly not true. So reactions, responses from any of you guys of seeing how all this stuff is coming to light, that the pressure coming from the administration was much more direct than we thought it was.
I guess now I can make a joke. I guess we learned a lot about people's data retention policies.
In what direction?
In the sense that like they were able to produce sufficient information about this.
No, they didn't.
Yeah, exactly. As in they deleted.
Oh
everything.
yeah, well, no. It was phone calls. It was phone calls.
Yeah, but
So
they didn't.
phone calls is the OG way. Signal
yeah.
disappearing messages are the new way. OG is just phone calls.
Yeah. Yeah, I had a similar kind of read where I was like, this feels like something that would have come out in like a FOIA request, but I guess to your point, like that's obviously not possible. And obviously it comes out through this Silvergate testimony or deposition or whatever happened.
Yeah.
I don't know. It's kind of like, I guess, shocking how like on point, like kind of the original image of what this was going to be. I was also weirdly reading like the wiki article for the original Operation Chokepoint and kind of like what happened, and like I feel like there was actually like not that much kind of political fallout from that, and so I don't know. It feels kind of like maybe that also emboldens people to kind of do the same thing again. But yeah, I don't know. It was just kind of shocking.
Yeah. So Operation Chokepoint, the original Operation Chokepoint, for those who are unaware, it was pressure that was put on by the Obama administration against payday lending and a lot of these kind of
firearms.
These are politically unpalatable industries. And it was sort of this nudge. Okay, high risk industries should not be banked, and if they are, then maybe we're going to give you extra examinations, or we're going to make your life more annoying if you're a bank. And this was ruled later to be unconstitutional. But as you mentioned, it's not like payday lenders are very popular. It's not like firearms dealers are exactly the thing that everybody cares about.
And I also don't think people think this was like a stain on the Obama administration. I think people remember like beige suit Obama more than they remember like Operation Chokepoint, even though this was way tons worse. So
yeah, I think the counterpoint to that is that of course now crypto is much more politically organized, and I think I don't think about payday lenders as having any particular clout in DC, but crypto, especially within the last year, has really gained a lot more clout, such that I expect there will probably be congressional hearings, especially if we see Republicans take the House, or Republicans, especially if they sweep, then we're probably very likely going to be seeing congressional hearings about this. You guys have other reactions or?
Yeah, I mean, I think we're also in the point where like the amount of like crypto donations goes to both of these parties. I think we're basically seeing like some amount of like support also from Democrats. Now, obviously, we know like kind of like the support that could be like on the Trump administration, but I do think that you have to reimagine again like the position and measures for crypto and what to do in the future, regardless who's going to be in the office. So I think that's kind of like the difference we have now and in the past.
Yeah, I mean the defense that might be levied in favor of this is to say, well, look, it was fog of war, there was a banking crisis, and it's the job of regulators to try to get banks to diversify their deposit bases. So one might say like, well, I mean, can you really get that mad at regulators for saying, oh, it seems like crypto is exploding, you should probably lower your risk on it? I think the fact that this was all done through over phone calls and they were very clearly avoiding having a paper trail, to me feels like the biggest sign there's a guilty conscience here. And this is not just like, oh, hey, bank regulators got it. It's a tough job. What are you going to do?
Yeah.
This stuff, it feels very similar to the COVID, what was it? The thing that like where Anthony Fauci was like, they were giving us some, they were using like an asterisk for some word. You guys didn't see the story?
Yeah.
There was something about the lab leak hypothesis.
We're not really reading as many conspiracy theories as you.
This is
Clearly
not
what we just left clear.
This is not a conspiracy theory. This is like this again came out in congressional hearings that basically Anthony Fauci, and I forget the department that he's responsible for, but basically there were more credible reports of a potential lab leak or like potentially validating the Wuhan lab leak hypothesis, and they intentionally in their emails where they were discussing it, they changed the name to have like an ampersand or something so that it wouldn't show up in document searches for FOIA requests. So like this is
I've seen this happen before too. People
Exactly.
like to misspell stuff for I think I mean to your point, I think they also discussed in the Unchained article that like well there wasn't pressure on SVB to diversify away from like VCs and startups, and that is arguably what brought it down, right? It's like one sort of monotonous, very similar credit and risk profile group. And so it's like it's weird that crypto would be singled out when other groups are not.
Or First Republic and New York real estate.
Yep.
Right. Which is like, okay, that's a very not diversified. But was anyone telling them like, hey, lower your exposure to New York real estate? So
I do think that FTX definitely like caused a lot of the challenges, and obviously the reception was that, this like if this can happen like with FTX, it can happen again. Like, and obviously like that's one big challenge. I think like in crypto, maybe like we can also like do a little bit better. Like, I don't know if like self-regulation is like kind of like the right way to think about it, but like somehow like self-policing. And
I was thinking about this the other day after our last show, because we talked about the eigenlayer disclosures, and we don't really have a standardized. People talk about like, okay, come in and register, right? There's securities laws that you can obey. Come in and register. Obviously, there's no way for a token project to come in and register with the SEC, and that's been widely attested to by everybody in the goddamn industry, including SEC Commissioner Hester Peirce. That being said, the kind of disclosures that normal equity companies need to do are kind of useless for token projects. And so people have kind of gestured at what a disclosures regime for tokens might look like that does make sense. And I think if there were a credible, sensible disclosure regime, people would be happily willing to do it. It might slow down a little bit, but there's already a lot of costs associated with launching a token in this day and age. So it's not as though it's like, well, we're completely averse to giving disclosures about tokens. Actually, the market wants disclosures about tokens.
Really, you're telling me that meme coins want disclosures?
Meme coins
Wait
is
a
a different
minute,
story.
buddy.
Meme coins is a different story. But,
Wait a minute.
But I think for most credible tokens that get listed on the major exchanges, like, there's expected to be some standardized disclosures, like Masari, which we were just talking about. They have kind of a disclosures page about every token. It's like, here's the issuance, here's what it does, here's the white paper, here's the GitHub. So again, the question in my mind is like, why hasn't there been some convergence on one disclosure?
Do you know the XKCD comic that says we have 15 standards?
Yeah, but are there
and someone
15
says, I'm
standards?
going to
I don't
make-
think there are 15
yes,
standards.
there are. I bet you, if you go and compare like
okay, you
Masari,
bet me, but like you don't know of any.
no, if I compare what Masari considers, for instance,
Okay, Masari.
versus what Token Terminal considers, versus what each individual project discloses about the investor breakup.
Okay.
The pie
you've named
chart,
two.
the
You've named
pie
two.
chart that every
the
project
pie
shows
chart
you,
is a meme.
they just everyone chooses what random categories they want. There's not even a agreement on that.
Yeah,
But
fine.
I think it's more like, okay, like where is that disclosed? Sometimes it's in like the Git pages or the wiki, or sometimes it's like
blog.
self-reported.
Yeah.
And then it's like, wait, was this actually verified on chain? Not usually. And so it does feel like there could be some sort of schema or something that would actually resolve this. But
Yeah. I guess I wonder, like, why hasn't there been more of a push from the industry to create one disclosure standard and just be like, yo, SEC or whatever new law is going to get passed.
It is literally the 15
Let's like
standards.
use this one.
15
I don't think
standards.
that's true.
Totally true.
Name me one. Name me one standard.
I will give you an example.
Okay.
Let's compare the top 5 proof of stake networks and their inflation curves, and how they actually decide their inflation curves and how it gets distributed. How do I compare those? I compare Solana, where the foundation distributes a lot of the delegates, a lot of the tokens. So it's like, okay, I now need to have the foundation disclose who all its delegates are, which it may not want to do for security reasons when there's a kind of an attack.
Yeah.
I also may need to figure out, okay, like what's actually the ratio at which the unlocks are happening for entities that have been dissolved, like the Alameda FTX stuff, where there's OTC trading of the locked token. There's so much.
There's fractal complexity
There's
to everything
so
in the
much,
world.
yeah, and
that's also true for equity disclosures.
Equity disclosures, though, are like
every company's different. Everyone's a special snowflake. Everyone's business model is weird.
That's not true, though, right? Like, if I look at all these like tech companies that IPO'd in the 2010s and the non-GAAP accounting stuff they do compared to the GAAP accounting,
They still do non-GAAP accounting bullshit.
No. But my point is, like, I think in crypto it's even harder. Like the non-GAAP part is like continuous time. Like you actually have to monitor
Okay, so
it.
are you claiming that the reason why this is not done is because it's fundamentally harder in crypto? Because that sounds like what you're saying.
Yeah, I think it's harder because I think it's way more continuous.
You think this is why it's not being done?
Here is a very simple but stupid reason.
Okay.
Which is in crypto systems, there is continuous time issuance. There's new issuance all the time, right?
Yeah, fine.
In every equity instrument, there's fixed time discrete issuance, and there's a notion of when the supply chain.
So update your thing every quarter.
Yeah.
This can't be every quarter. This needs to be real time.
Okay, so have the real time thing, but the SEC needs something every quarter.
My point,
like businesses are also real time.
My point, though, is that it's like very different when you're like changing your cap structure continuously, right?
I mean,
that is a
that's not the
fundamental
thing that makes it
unique.
very
That
that's
is
not
a
the thing that
unique
makes it
thing
very
to
different.
crypto.
That's not unique to crypto.
When there
are lots of businesses that have continual streams of income.
No, but they don't have continual equity dilution.
Yes, they do.
Who? Give me an
They don't
example of
have to-
someone
no,
who
a
is
company does not
selling
have
their
to
equity
dilute
every day.
equity or
Give
make
me,
equity
give me
grants
an
on a
example. Give me an
quarterly
example of
timeline.
a company, equity company anywhere in the world that is selling equity daily.
Doesn't have to be daily.
This also does not seem impossible to capture in some sort of form. Like even when you're looking at your like vesting tokens that are block by block, it's really just like you send in like a block number or like a timestamp and like, okay, we're going to calculate how many you have at this moment in time. Like this doesn't seem impossible to me.
It's just everyone has different standards for it.
Well, okay. I think to answer your point, maybe as to why the standard has not evolved, it's because there's not been market pressure, right? Like people are not rejecting tokens that are not extremely transparent or accurate with their disclosures. The same way, if you're not an ERC20 token, like you're probably not going to get integrated into all the wallets, all the exchanges. It's going to be hard to list you. And so I think the question is, how do you sort of create that market pressure? You have, I think, some venues that do a decent job. Like I actually think DeFi Llama, for example, is a good job where if you want to be on DeFi Llama, they have a little Git repo. You can fork it, build your own adapter, feed them data. Great. Now everyone has the same sort of spec for like feeding data into DeFi Llama. CoinGecko, very similar kind of thing for, what is the total number of issuance? What is the current float, et cetera. But like these are also, fragmented one-off instances versus having something kind of more holistic.
We need a disclosure oracle based on that.
Something like that.
It feels to me. So I
Really good
I
idea.
think
I'm gonna go and raise now 100 million. Who's gonna invest?
Yeah.
We're on board. We're on board. I think you're absolutely correct that the market pressure is the thing. Like, so who is the final boss for tokens that need to become more legible to people?
Binance.
The answer is Binance, right? The answer is the exchanges. And the exchanges.
I mean, we've seen some crazy percentages given out recently.
Yes.
To the final boss.
Is that
right.
true? Actually,
I mean, it's in the docs.
Yeah.
Yeah, I've heard it's like 10, 15% for some of the latest
Well, I
projects.
don't know if it's that high.
Net-
Scroll was like 5,
I think
right?
Mimi was like 5.5%.
Scroll was like 5.
Yeah, but Scroll is an 8-year project. For a lot of these people who are like doing launch pool and doing all this other stuff, it's like I've heard lately numbers are getting up to 15%. So it's kind of crazy. But it's very subject to your market power, right? So if you're Scroll, you can get away with a lot better than if you're Catizen or whatever. So all that is to say, I think there's a lack of coordination, right? If you look at the forms, so there's like, a front page. If you want to say, I want to list my token on Binance or on Coinbase, there's a form and you fill out the form. And like the form is also very different from like DeFi Llama, right? Where DeFi Llama is programmatic. The form you fill, it's literally like just a Google form. And the forms, in a way, are the closest thing that we have to a disclosures regime because you have to disclose all the stuff to the exchanges. And I guess what really feels like there should be is the exchanges coordinating together. Do like, how universities have like this common application that fans out your university application to all the universities in the country. Like we need to have something like that for tokens. And then that can evolve to become this disclosure regime that countries that are figuring out how to do disclosures around tokens can just say, just pick this up, add 1 or 2 things to it, and then like, cool, it's like ready to go, as opposed to reinventing the wheel, which like you've seen all these proposals from the SEC, not from the SEC, but for the SEC are all kind of just super convoluted and very, very complex in a way that feels like they don't really work with each other particularly well. So
15 standards.
My claim is 0 standards. My claim is, right now there's not anybody trying to fight to make a universal standard.
I think people they don't want to dox themselves or like dox the amounts, and like unless there's like what you said like about like market forces just pushing people to do this.
Yeah. Kind of. I mean, like for something like Aave or Scroll or whatever, it's like, okay, it's all out there. Everyone knows the co-founders. Everyone knows the amounts. They post the pie chart, so, and it's like, okay, well, I want to be like
But
Scroll.
We don't. The standards definitely applies to these pie charts. Like
there's no standards to the pie
such a,
chart.
like,
I mean, there are, right? When you break the standards, you get yelled at. So there are standards.
Barely.
What do you
When
mean
you break
barely?
the standards, i.e.,
When you break the standards, all
my
Twitter
things don't add up
laughs
to
at you.
100%.
Yeah, I mean, yes, and then all Twitter laughs
my
at you.
point is, there's a lot more hidden in the sectors than
There are, but like it's also true in disclosures.
I think it's just that we've never, for boring TradFi people, they're just not used to the idea of continuous dilution, continuous disclosure. Like everything has always been this discrete. There are fixed intervals. You have earnings at a certain time. You have fixed dates, fixed duration, right? Why are perpetual products and duration-free products so much more popular in crypto. It's because the intrinsic asset itself is constantly changing.
I don't think this is true. Like CEOs talk to the media all the time about their companies.
That is
in the middle
not
of
the
day.
same as disclose as my equity assets inflating itself every day.
But you can do disclosure upon a date. So let's say like February 1st, this is the amount.
Sure, but like I think
I just think this is not a difference in kind. This is just not a difference in kind. You know,
I-
like there's a big dump of disclosures on a quarterly basis by companies, but there's also continuous disclosure. There's also continuous communication.
it's not continuous.
Also continuous repricing.
It's not continuous.
There's, I mean, all these things are happening on a daily basis.
It's nowhere near as
Okay.
continuous. Right?
We can
But-
switch to 1 day block times if you want instead, so we can like
Yeah, there you go, there you go.
No,
Yeah.
it's not that that's what I'm saying. I'm saying like I agree with you. There's some batching size that's fine, but I think there's a lot more nuance to how A, people think about inflation curves, B, how fees are burned, B,
Okay,
how
all right.
like
let's,
I feel
let's
like-
pause here because I feel like we're going in circles a bit. But speaking of block times, there is a good segue. There's there's one.
what segue could that be?
There is one EIP that is gaining a lot of traction right now.
Oh,
EIP 7781, proposed by Ben Adams, that is proposing what we were talking about on the last show, which is the Make Ethereum Great Again of expanding, reducing the block time on Ethereum from 12 seconds to 8 seconds and expanding the amount of blobs from 6 to 9. So Justin Drake has come out in favor of this proposal, claiming that actually there are a lot of positive flow-through effects if you just decrease the block time. So one of those things, of course, is UX, but another thing is that you just get less MEV if you decrease the block times, because that means that the block times you can think of as the exchanges are down for 8 seconds at a time all the time. And if the exchanges are down for 8 seconds, then that's just more arbitrage, that's more MEV, roughly 1.2 times more efficient indexes that would save about $100 million in SEC-DEX arbitrage. That's an estimate from Justin Drake about how much more efficient DeFi on Ethereum would get by just lowering the block times just moderately from 12 seconds to 8 seconds. Of course, as always, there's concern about solo builders. Are they going to be skipping blocks? They no longer be as competitive. But it seems like now the momentum and this meme that we talked about on the show is gaining some traction. So if you remember, I think it was last year, or maybe early this year, we made a bet among the four of us on the show about whether or not Ethereum would move some of these big improvements about increasing the gas limit and lowering the block times. And I think I'm the only one who bet both increased gas limit and decreased block times. And it looks like we are now into that phase of the meta where all the big changes, multi-proposer and all this stuff are not happening. All this stuff is not happening. And the decreasing block times and increasing the gas limit seems like these are on the menu.
Are they actually increasing the gas limit?
Not
or
in this
the-
proposal.
block.
Not in this
Just the
proposal.
block.
Not
He's
this
Okay.
being,
block
he's been
time.
taking a little liberty with his.
Well,
his
there's still
gas
time.
limit
There's still
here.
time. There's still time. Be patient. There's still time. And I'd say also increasing the amount of blobs is kind of a backdoor. Yeah, that sort of like.
Yeah, I agree, but it's still different.
Yeah, I mean, look, we'll see. So anyway, thoughts on Stani as a Ethereum builder? How do you feel about EIP 7781?
Not a block builder, just to be clear.
Yeah, no, sorry, not a block builder, but Ethereum. In the Ethereum ecosystem, how do you feel about Make Ethereum Great Again vibes that we're now seeing revitalized?
Well, I think like the previous idea was that we will Ethereum will move very slowly and a lot of the innovation will happen all twos, and that's where you can experiment, do some interesting crazy things. And what has effectively happened is people are just forking get there and creating all these networks without much of an innovation. So I think actually innovating on L1 is the right way to do it, because that's where a lot of the value is. And that's basically where a lot of the baggage is actually. In terms of where Ethereum could be today, I think there's a lot to do. And I think this is just a first, as you mentioned, with these two different changes, I think these are just two out of multiple many that could be done over the next few years just to make it the best execution environment. I think this is a really right direction to go, especially because we have to have an infrastructure where you can simulate similar type of trading that you have in some stock exchanges and so forth.
I mean, to be clear, innovating is a strong word. I would not call this innovating.
Well, this not, but I think they should go 100x more into this idea of
100x
how to
more.
improve Ethereum L1.
Are
That's,
you
I think,
advocating massively lowering the block times?
Not just that, but just innovating.
Not just that. So you want to also massively decrease the block times?
Well, of course, but also besides that, I think there needs to be a lot of innovation on Ethereum in L1. as a kind of like pure like an idea. Like Ethereum shouldn't move slowly with changes.
So I would analogize, like we've made a lot of comparisons with like this make Ethereum great again thing with like Trumpism. And I think it is kind of analogous because in my mind, lowering the block time is kind of like lowering taxes. It's very easy to do. It juices the economy. It like, obviously like in the long run, you know, you can't keep doing this forever. Like at some point you need taxes.
Same with gas, increasing the gas limits.
Right, exactly. Right? You can't just lower your taxes in your way to prosperity. Eventually you have to pay the taxes back. But it sounds like you are much more of a performance maximalist on layer one. And you want to see like what kind of block time would you want to see? And how do you respond to people who say that, well, look, the thing that makes Ethereum different is the home staking philosophy, the decentralization maximalization. If you lose that, do you not lose what makes Ethereum Ethereum?
I think we have decentralization is a really loaded word. Like it means different things to different people. And I think what's more interesting is resiliency, how Ethereum can sustain to be resilient, but at the same time can be performative in terms of like infrastructure. I think that's the direction to go. And I do agree that these changes are like quick fixes, but like we should go into actually architecture and think about like how we architect Ethereum to be better. That's my two-way.
Reactions? Wait, so what is the block time you would want?
Well, you will have to calculate that it doesn't really cause issues. So there's a limit at some point.
Yeah. But I mean, what would you want? All things equal.
Roughly like 100, 200, 250 milliseconds.
250 mil. That's faster than Solana. You want faster than Solana blocks on Ethereum.
Yeah, fuck it.
Yeah, fuck it. Okay.
Stani
So
loves
to be clear, 100 milliseconds,
Stani loves Meggy.
Yeah. To be clear, like that is faster than speed of light communication around the world. So that is a tall order of 100 milliseconds. But I like where I like. So
I do think getting it to 2 seconds is okay.
2 seconds.
If it's possible and it doesn't really, you still can have a resilient infrastructure.
Okay. So absolute performance maxi. All right. What's your reaction to that?
Well, I sort of dispute the claim, the 1.2 thing, because I think that's just coming from square root of 12 over 8, which is like 1.22, which is where Justin's number comes from. Because it's not like it's like actually purely monotone that you decrease the MEV. There is some amount that gets increased also.
Okay.
And so like I think this is a very important thing that there's a lot of
I told Justin is a god, and
there's a lot of
Justin says we have to obey.
There's a lot of academic research.
There's
on
one
this.
thing on which I will trust Tarun over Justin, and it is quantifying MEV equations.
With MEV,
over
I
time.
trust Tarun more.
Okay.
No, I mean it's a heuristic, right? The square root thing, which is where it's coming from. But
that was a grave insult that you just gave.
I'm more interested in the blob space increases actually, because as
so very briefly, can you explain what blob? Blobs
so
are?
blobs are just where L2s write data to the main chain, and that's sort of used as sort of temporary storage until the chains are fully valid and their transactions are validated.
So the proposal wanted to increase the amount of blobs that are available for each blob.
Yeah. And so I think the idea that blobs are going up is interesting because like the blob market has sort of been anemic. Like it's had a couple moments of a lot of usage and the fees going up for it, but it's been a little anemic. And so it's interesting that the question is like, does expanding that, does it have a if you build it they will come type of thing where like all the OP stack chains suddenly are like we're not going to use Celestia or AltDA and come back, or is it sort of going to be a remnant usage? And I'm kind of curious to see if the expanded blob space actually attracts some rollups back. I'm not sure it will, but I feel
price is like
it's very competitive.
Zero.
Yeah.
It's funny. Like, I think Vitalik's justification was like it's like 75% full on blob space. I'm like that still means there's like an oversupply of blob space, right? Like if only 75% is consumed, like imagine if only like 75% of block space was consumed. It's like okay, well there's like way too much block space then.
It's not way too much, right? Because there are
bursts.
There's like 7 consumers.
Yeah, but on any given block, it's like you said, basically like anemic. So you're right that like you want a little bit of slack in the market so that when fees spike, it's not like totally fucked. But it doesn't strike me that the market is screaming at that like we need more blob space right now.
Yeah, I agree. I don't totally understand why they're doing that. Why that's coupled with this?
That's the weird part of the
Yeah.
proposal.
It seems like it would make more sense to increase the gas limit because that's the actual thing that we're bumping up against, not the blob storage. The blob storage is fine. And if anything, like I've seen a lot of comments from people in the kind of Twitter Ethereum chorus or like, oh, make Ethereum price go up of maybe we should increase the minimum cost or even lower the blob maximum. So because right now, it's basically, marginal pricing is zero because there's no opportunity cost. But once blob storage is full, then the reality is the willingness to pay for blob storage of like the rollups that are currently selling on Ethereum is very high. So they'd be willing to pay a lot of money to put the blobs on Ethereum. But right now they have to pay nothing because there's just, there's no scarcity. So the moment that blocks are full, then you actually see what is the auction going to settle at. But when blocks are not full, there's no auction and therefore everyone's paying zero or, some de minimis price. So I understand the point of like, well, we don't want people to start paying a lot of money very soon. And it's very easy to store.
It feels a little cart before the horse, like prove that you need to do it, which is like the weird part.
Yeah, I mean, I can understand the thinking of like, okay, well, why don't we just snuff out all the DA layers before they even have a chance to survive by just signaling that Ethereum will always remain super cheap and we won't let prices increase, right? That could be the rationale, and that maybe I see that on some level is that, okay, once we kill all the other DA layers, then we allow prices to rise, but we don't let prices rise before then. Right. So it's almost like
but you would want to see
dumping,
like
and that's
Amazon.
illegal.
What's
Yeah.
that?
I believe that's called dumping, and that's illegal.
Is that dump? That's not dumping. Is that dumping?
Yeah,
kind of.
Yeah.
No, because it's not below cost. No, it's not below cost.
I mean,
what is cost here?
Yeah.
Cost is below what the network is paying in costs, right? I mean, the
But
cost is stored.
I don't know what the blob costs really are.
Yeah, so you can stimulate that, right? And it's like, okay. But also like it's not cheaper than Celestia, so it's not dumping. Like Celestia is even cheaper.
I think blobs are quite
Yeah, they're
cheaper.
almost nothing, but
Yeah,
Celestia is
yeah.
even more almost nothing, right? So like strictly Celestia is cheaper, so that's not dumping. Dumping would be like I'm undercutting Celestia intentionally, even though that's below my costs, right? But that's just pricing strategy. The pricing strategy is not dumping.
Yeah, I guess I still don't think about the like the cost.
Would you
of
say
production.
Amazon was dumping before they
The
started
only
charging
reason
a
I
profit?
would disagree with this is like we're kind of talking about Ethereum blobs, which are at Ethereum block time versus Celestia and EigenDA blobs, which are faster. So we have to like actually add up all the fees.
That's the interesting point.
I
Actually.
think we actually have to write out the math. I think both of you could have some.
Sure,
aspect.
but the cost is like the storage over time, right?
Yeah, but like we if you want to make
like
this
megabytes,
dumping,
how much you
yeah,
can
exactly. We should be
basically
like
push
looking
data.
at the total.
Sure.
Yeah, I'm also like I feel like if anything, stuff is all kind of below cost, right? Because you're still having an inflationary environment, right? Like you're paying people to store these things more than they would be paid by the market.
You're paying people to store these things?
Yeah, through
On
just
Ethereum?
like general sort of block rewards, right? Like you're still in like an inflationary environment.
I see what you're saying.
Yeah.
I see what you're saying. Right. So the cost is the opportunity cost of including a block, right? And then the opportunity cost of storing the stuff that has to get replicated across all the nodes.
Yeah.
So,
I mean, I'm saying if market participants are not willingly
yeah.
paying
But
it themselves,
my claim though is that the inflation is a totally orthogonal cost from the cost of marginally including or not including a blob, right? Like the inflation is getting paid either way, and the inflation is a security budget, right? It's not like the marginal cost is not the fixed. That's a fixed cost.
But it also affects people's like willingness to like run a machine and like about like I guess that's part of the issue also with proof of stake. It's like what is actually like the cost of it.
Right. But my point is that nobody's turning off their machines because there's too many blobs running through it.
Sure.
You know, in which case that's a
Right.
fixed cost.
That's actually a good point, which is like a lot of the solar staker commentary on the blob is about the blob increase because they're like, oh, it's extra bandwidth for me. It's expensive.
Oh, interesting.
And that's why I think the idea that this change was like we'll lower the latency and increase the blobs, which is the thing that was getting complained about the most, is that's what stands out to me about it.
Right. Okay. All right. Well, we're running up on time, and I know we got very wonky at the end about EIPs and blob storage and so on.
That's just because you want to win a bet. Let's be real. Like,
Yeah, that's
we
what
all,
you wanna
we,
do.
You gotta
we
increase the
all
gas limit
know
for me to
that,
win the
we
bet.
all know why you made this. Add this.
To be
topic.
clear, I think what's riding on this bet is Red Bulls. So for which I have no use.
For which I'm the only one who has a lot of utility.
Correct.
for.
I don't drink Red Bulls. But Stani, what should we be looking forward to in the Aave universe or the Avara universe? Because I know Lens is also part of the Aave family, Avara family. What should we be excited about, and anything we should look forward to at Permissionless?
There's a lot actually happening. So obviously there's constant innovation happening on Aave's side. We're working on V4, which is going to be a more capital efficient version of the Aave protocol, more risk management tools. Also, there's obviously with Avara Lens, we're working on Lens V3. And speaking of that, there's also like a Validium implementation where we're actually like using a DA. And that's where terms comments is interesting, because something like social, where you need to push a lot of data and you don't have enough like basic data with these block time intervals. So that's something interesting. We're doing family wallets, which is focusing on like really, really nice design and experience on Ethereum. That's going to launch pretty soon. That's all the products we have.
Okay, nice. And I last thing I want to ask. So unfortunately, Robert couldn't come out because of course he just had a kid. But
as everyone made fun of you on Twitter for.
To be clear, I was making a joke that he had a kid timing with the bear market, which is upset. Okay. My question is, what is your relationship like with Robert? Are you guys like frenemies? Because of course, Aave, Compound, competitors, but then it's like he's moved on. You're still at the helm.
I mean, at the beginning it was weird because in somewhat like we're both building in the same kind of category, and I think a lot of people put us to kind of like compete with each other.
Yeah.
And I think at some point, kind of like once we actually met in real life, all that kind of like weird tension just like disappeared, and like we were like more friendly. And
is this after he walked away from Compound, or he was still?
No, actually, like still like during.
Compound,
during. I think that there's. I just think Robert is a really, really smart person, and he's like a really good inspiration for a lot of builders as well. He's done an amazing job with Compound, and he's doing now Superstate, which is really cool. And I think he's quite kind of like ahead of innovation. He kind of understands like what's the thing that is important to focus on to get like more adoption as well. So he builds cool things.
It's a really heartwarming note to end on.
I wish you were here.
Yeah. Well, I guess you can get invited back. So
well, thank you.
Well, you're a great crypto connoisseur, although you're no Robert, but you're amazing in your own right. So thanks for joining us.
Thank you.
And we'll see you all next time.